I'm very pleased to be here today and quite humbled to be speaking alongside such impressive speakers and critical players in international development. So thank you for the invitation. JP Morgan has a team called Social Finance. I'm leading client coverage for that team in Europe. And that is a team that was created in 2007. And our overall mission is to alleviate poverty through supporting sustainable, innovative, efficient business models which will generate a financial return. So it's what we call a double bottom line: financial return and positive social impact. We play, see here. We do that through four main pillars. One is investing JP Morgan's own proprietary capital. We invest that primarily through funds. So we seek to support solid fund managers who have a real track record and who have strong local presence on the ground and who've had that presence for some time. We also do that through bringing co-investors in alongside ourselves in the funds that we help anchor. Those investors can be institutional investors such as pension funds and banks. They can be high net worth individuals, and they can also be corporates. And I think that that is one of the advantages of being part of a large global bank. It's basically to be able to reach out to different set of investors, but that are aligned with our mission of creating a real difference when it comes to social impact, but supporting efficient businesses that create a financial return. And the third pillar of our team is basically thought leadership and research. So when we think about how can we act as a catalyst in bringing investors into what we call the impact investment market, we also do that through providing research. We came out with a research report last year, which we're hopeful that we'll be able to follow up on quite soon with a follow-up piece of research, where we looked at what is impact investments, what defined impact investments, how do we look at returns, what are some of the risks involved, and how can we help investors assess the potential opportunity in this market. So we came out with a research report that basically positioned impact investments as a new emergent asset class, to which we got quite a few reactions, some very supportive, other things that it should not be a separate asset class, and I can comment on that. The fourth endeavor of our team is really to strike up partnerships with critical organizations that work for the same mission that we have and international development. One of those organizations is Gates, the Gates Foundation. We've seconded 3 people into the Gates Foundation at a very senior level to work with their health team to structure and then hopefully place impactful, investable products in the area of healthcare. Now, when we look at impact investments, I think as a part of a big bank, you need to have a very special mandate in order to do impact investments. Because clearly, we are not in the business to maximize returns. We are hopeful to be able to do good investments that make business sense, but we do not expect to get fully risk-adjusted returns. So we are prepared effectively to take a discount on those returns in return for a very clear social impact. Now, in the research report that we came out with last year, we effectively defined impact investments as investments that are specifically intended to create positive social impact beyond financial return. And the sectors that we look at they span from healthcare to agriculture, nutrition, microfinance, microinsurance, and education. That research report went out to 25,000 people across JP Morgan's research platform. And I think that is one of the ways that we can really help catalyze this market and catalyze impact investments and funding for the social entrepreneurs and the companies that we see are playing such a crucial role in alleviating poverty at the base of the economic pyramid. So by getting a research report out to so many people, we were hopeful that it creates awareness, but also that it helps build an emerging investor group that we call impact investors. Now, we believe that the market opportunity is potentially very big. And Richard touched upon that a bit earlier today. I think whereas in the beginning there was a real focus on how can we get capital into this space, I think that has somewhat shifted today. I think the real question is, the capital is there. The capital is actually there in very significant amounts. The question is more, how do we help build the investable opportunities in those markets so that investors like us and others who have a real double bottom line focus can actually come in and provide capital either directly or through fund and solid fund managers. And I think that is where it will be very important to strike up public-private partnerships. That can be done in different ways, but one of the ways that we have been working to date is effectively partnering up with very solid public sector partners, foundations. Either they provide technical assistance facilities to the funds and the companies to be able to allow them to grow, to build expertise, and to further advance them so that they can become real investable opportunities. The other way, of course, that public-private partnership for us work very well is where public sector work closely with ourselves, but also very closely with local authorities and governments in African countries and South America to strengthen the business environment, the legal framework, and the regulatory framework, so that we have an increasing confidence that effectively when we do invest in those countries, we have a solid business, legal, and regulatory environment in which we can operate. Now, how do we look at returns? So I mentioned that we do not seek to maximize our returns. Clearly, we hope that our investments will generate good return, make good business sense, but we at the outset recognize that effectively we're willing to take a discount to fully risk-adjusted returns because we believe in what we're doing and the growth potential. Now, we conducted a fairly large survey when we looked at the impact investment space, and we got over 1,000 replies from very solid players in the impact investment space, giving us significant amount of data when it comes to their return expectations, both with regards to debt and equity in emerging markets. So we look at Africa, Asia, and we also look at developed markets. Now, clearly there's a lot of assumptions behind this and a lot of caveats that has to be made. But I think overall what you see is that when you look at the emerging markets, the expected returns for investors in developing countries and emerging markets, the expected returns are competitive. When you look at the developed markets, we're starting to see also an impact investment market building up in developed markets such as France, UK, Germany, where you wouldn't otherwise think there would be a need for impact investments, but we're clearly seeing that there is. You there see that the returns are somewhat concessionary, both with regards to debt and equity. Now, apart from investing our own money, which we've done, some examples are here on the screen. We've invested into microfinance, microinsurance, SME lending, and also social entrepreneur fund in the UK. But if we take a step back and think about what role can we as a big global bank play in this space, I think what we're seeing today is that there's a real shift in terms of investor interest in this market. And I think you'll see more and more banks. I think we're the first today that has a social finance team. I think it's just a matter of time before other banks will come out with similar teams. And that is really driven by the fact that there's a true, genuine interest from investors to do impactful investments. The question is, how do you do it? Because the market today is large, the opportunities are many. Where do you start? And I think we as a big bank can help play a catalytic role in providing products to that investor group over our global platform. Clearly, we have to be conscious that even if the supply can be significant, the market is still at a very early stage. It's evolving rapidly, but it's not a market that's going to be able to accommodate quickly $10 billion. So we're building it up sensibly and gradually. But I think that what we'll see going forward is a new investor group coming into this space, and we're hopeful to play a catalytic role in that alongside the partners that we have seen here today in developing very impactful products in the healthcare arena, financial services, and also supporting innovative, sustainable business models using technologies such as mobile phones. I've kept it brief, Paul. Thank you.